Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a new week here? Well, of course, off the Sunday open, we saw a emergency rate cut by the Federal Reserve, which left markets reeling, with the stock markets essentially selling off, limit down within a very quick succession from the market open. In fact, we were able to capitalize on that blip higher on gold, banking 200 points on the breakout that we saw initially on gold, before we then started to see stock markets and also energies tumble over 10% to the downside, as the Federal Reserve's second emergency rate cut has failed to calm fears of a coronavirus induced recession. So with that, let's move over to the charts and we'll talk you through the opportunities that we see setting up for this week. Firstly, let's move over to gold, and what you should be aware of is that the gold to silver ratio hit 122 to 1 over the course of yesterday's open. That's right, we've never seen the gold to silver ratio that high before, which would effectively mean that it would take 1 ounce of gold to buy 122 ounces of silver if you were able to exchange it at spot price. So this incredible move to the upside meant that silver also had a dramatic move lower. In fact, silver broke down to 11-year lows, dropping back below $12 per ounce. Not only that, we've also seen platinum here break down to 18-year lows, levels not seen since 2002, breaking down as low as $540 per ounce. And bear in mind, just 1 month ago, platinum was trading over $1,000 per ounce. So platinum essentially has tumbled almost 50% in just 1 month. So with these historical moves that we've seen across the markets, what should you be looking at next? Well, the name of the game right now is very much being nimble and taking advantage of trades in both directions. So of course, you want to both be selling short and also going long, trading the ranges and really capitalizing on the ebb and flow of the markets day to day. And therefore, you want to be taking your profits when they become available. We've got a great amount of volatility right now. Let's just consider gold, for example, which has moved over $100 or over 1,000 points in just one single day today. And in fact, last week, gold started the week at $1,700 per ounce, which was the 7-year highs. And then, of course, by the end of the week, had tumbled all the way back down towards $1,505 per ounce. So almost a 2,000 point sell-off last week for gold. Now, we've mentioned this before. Hedge funds and money managers, again in the latest week, they cut their net long positions. Now, we have been discussing this with you since the beginning of March, which was that hedge funds and money managers, each week they continued to trim their net long positions. And this was the same for silver and also for platinum. And now you can see where this has really started to accelerate in the markets in the latest week. So what are we looking at now as we progress throughout this week? Well, gold has essentially broken down as low as $1,550 per ounce. This was support going back to November and also December as well. In fact, this is where the low was put in over that quarter, and we saw the price springboard higher after we tapped those levels at the beginning of December. You can see here where 1450 was the low, and we continue to be able to accelerate all the way up towards the 7-year highs from that period onwards over December, January and February. And in fact, we've seen strong support come back in at that level again. The way I would be looking to trade gold and continue to trade gold at the moment is taking advantage of a combination of factors. So you want to look at very key zones at the moment. So far this week, we've seen resistance coming in at $1,575 per ounce. Clearly, we have support at 1,450, and at the moment, we're sitting right in the middle of this range. So you want to look at opportunities here to trade when certainly we come down to extreme levels where there is significant support, to look for evidence of buying coming in at those levels in order to then get really tight entries and take an opportunity from the ranges that we're seeing week to week at the moment. So you can see here the bounce even today giving you over 500 to 600 points here if you got in really tight at support. Essentially on gold at the moment, if we are able to hold above the 1500 level, this is where I would look for momentum to then build back up, and we could start to begin a further retracement and essentially have a tap back towards the weekly highs here. So that would take us back to approximately where we began the week at $1,576 per ounce. if gold can get a lift from here and continue to follow through with this retracement that we've seen so far on Monday. I am expecting more range bound trade over the course of this week, but that's if gold can continue to build momentum above the 1500 level. If we just very simply see a dead cat bounce here and all we're going to see is retracement, but then gold slowly but surely roll over to the downside, then of course the first level you want to look at again here is going to be 1,450 US dollars per ounce. If that level is taken out, it opens up the door all the way down to $1,400, and below that 1,385 US dollars per ounce. If you have a look at that on the weekly chart, you will then see more clearly where these levels do reside on the charts here. So you've got magnetic levels below, of course, at 1,400, and below that at 1,385. Now that would only be if gold was to rotate lower from here and we get a washout to the downside. Right now, we're getting support where you would expect support to be coming in at the 1450 level, a close back above 1500 on the daily chart here, and it's possible that we could springboard here and we've just accelerated too far to the downside. So we've essentially seen a mass liquidation of many positions as portfolio managers are being margin called with the stock market sell-off that we've seen again today with over a 10% decline for major indexes. And this has caused many traders to sell out of their gold positions prematurely, and now we're starting to see the bounce back. So these are really the key levels that I would look at on gold over the course of this week. Then moving over to silver. Silver right now is trading at $13 per ounce. So we have to bear in mind that silver has dropped to 11-year lows. And so far this month, it is down over 21%. Now, you certainly don't want to catch a falling knife on silver right now. We are seeing very large moves day to day, but you also want to be mindful that at some point this is going to set up for a great buy opportunity, and likely you're going to see a V-shaped reversal capitulation. The big question is, has that happened already, or are we going to be due more downside over the course of this week? So you want to watch out for more buying evidence. We're currently closing around $13 per ounce, or just above that level. Where the danger lies with silver would be if it continues to roll over and you see the price action break back below the previous day's low. That's where you're very likely to get another washout and then retest $11 and potentially lower than that to the next key levels, which would be $10.56 below that as well. It's not out the question if silver continues to tumble and pull back. What we're seeing a lot at the moment is each time the global stock markets like the S&P 500, the Dow Jones, when they're washing out again to the downside, it's putting pressure across all of the commodities as many traders start to liquidate their profitable positions or get margin called in their portfolios. And that, of course, has a knock-on effect where there are other positions in the portfolio, such as platinum, such as palladium, such as gold and silver. They also get liquidated, and it causes a further acceleration to the downside. Now, if we have a look at this from a supportive point of view, what silver really needs to do if it's going to hold at these levels would be to then continue to accelerate to the upside here, bounce off the $13 handle, which is already closing at the moment, and start to build a base from these levels to show evidence that it has formed a low, and we're going to see some sort of capitulation and V-shaped reversal to the upside. A very similar price structure that we've seen recently has been on the dollar index. So you can see here sell-off which accelerated more than it should have all the way down towards the 94.50 zone. In fact, we remain long the dollar. We picked up some really nice positions on this. We banked just under 300 points on this trade, so it's worked out really well. But that shows you what a capitulation move would look like. So this is the dollar index and then the subsequent V-shaped reversal. And this is very similar to what you're seeing across the board on gold, on silver and platinum at the moment. So you're seeing the acceleration to the downside, and then what you want to look out for is evidence that the low is in. So you want to see whether we now get follow through. So I'll take you back to gold, for example. So we want to see again here, are we going to see it's holding around just above 1500 at the moment? Is it going to be able to stage a V-shaped reversal recovery here to the upside, in a similar way that the US dollar has as well? Are we going to see some sort of recovery, or is this going to move more like the S&P 500 recently, which has had no recovery here. It's continued to break down. You've got multiple bear flags. That's also been the same with oil recently as well. We've just continued to get these multiple bear flags and break down, and that's what we need to keep a very close eye on with the metals right now before you start to pick the lows in these markets. So I'm looking out to see whether we're going to get more buying evidence for a V-shaped reversal and therefore be able to capitalize on low prices, or we don't want to catch a falling knife. So if we're just going to see the price action continue to sell off, look for sell opportunities or look to trade it via inverse correlations as well. Gold is just generally great to trade day to day at the moment. The volatility on it is amazing for range bound trading, for going short, for going long. Gold is the one. It's perfect to be able to day trade the volatility on that right now, which then brings me over to crude oil. So crude oil is trading back below $30 per barrel. You can see it at the moment. It is trading at $29.48. Again, crude oil has been classic with these bear flags, continued breakdowns that we've seen multiple times now since we've had this acceleration to the downside, which really began in the beginning of January here. Now, we still haven't filled the gap here on oil, and I suggested this last week as well. You wanted to be really careful. There were many traders out there that were looking to try and fill that gap, and you've actually had a false breakout to the upside and then a complete reversal and another sell-off and a break back below $30 per barrel here for crude oil. So each time we're running into resistance overhead here, it just cannot climb or close above that level, which would then be an indication that you've got the beginnings of a turning point for oil, and we're just not seeing that at the moment. We're seeing continued washouts in this market. Coronavirus headline news items all put pressure to the downside on oil, and of course we have the deterioration in talks between Russia and OPEC, which has led to an oversupply in the market, and that continues to drive the price lower too. Essentially on crude oil at the moment is trading at $29.48 per barrel. If it was to roll over, break back below the weekly lows here and then take out the swing low, which is essentially $27.33 per barrel, my expectation would be we'll roll over and we'll break down to $26 a barrel here. That's the bearish scenario if we just see continued pressure to the downside, which has been the case throughout most of the last week. If oil is able to catch a bid at these levels, and you can see evidence with these high wicks that we are getting some degree of support around the 29 to 28 US dollars per barrel handle, the major resistance zone then resides at $32 per barrel, and if we were able to break and close above that zone, then you've got $34 a barrel just above that as well. Right now, oil can also be traded range bound, so there are some decent ranges that we're seeing. Even from the beginning of last week, we had over a 700-point range on oil, which provided some great opportunities during the course of the week. And right now, at $29.47 per barrel, we're also very interested to see how the API data this week on Tuesday is going to affect the price, and also Wednesday's crude oil inventory data as well. All of these, of course, can be catalysts for significant moves with the energies. With respect to hedge funds and money managers, they have actually bought again in the latest week, and you can see, in fact, where crude oil has been much better supported than Brent crude oil, for example, and some of the derivatives in the energy market right now. So although crude oil is under pressure, we are seeing hedge funds and money managers build their positions at these levels, and as such, we haven't seen a full-on washout of this market so far this week. While stock markets have been under pressure and also the precious metals have had significant sell-offs, crude oil so far this week has been relatively muted in comparison. As ever, it is very important that you're nimble in the markets, that you're able to capitalize on these quick in and out opportunities going both long and also selling short, and it's important that you're able to receive up to the minute real-time analysis, research and trade ideas throughout the week so that you're able to navigate with a much higher level of certainty and accuracy to maximize on opportunities that we're seeing in the markets at the moment. If you would like to receive that information on a real-time basis and join a community of successful traders, there is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you get access to our live trading room webinars, real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below the report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.